I think the real value you find in sectors that are suffering, that are unloved by the market. And I think as far as that's concerned, you look at advertising and you look at traditional media, and that has to be the most unloved sector. Advertising generally, it keeps on bouncing along the bottom until we see a real pickup in retail spending. We won't see a real pickup in advertising. There's been a lot of speak about online streaming services, Netflix, etc., gaining market share. Obviously, you've got the internet that's now quite mature, but still seems to be growing its market share. So the sector that's really being left out there is traditional media and free-to-air TV. So Prime TV, I think, is a good example of that. It was trading at about $1 a year ago. Now it's trading at closer to 67 cents, I think it is at the moment. It was trading at about 60 cents before it announced its results last week, and they're still maintaining their revenues. The NPAT was actually up 14%. The dividend is around about the 10% mark, which is before franking credits. So I think that as far as advertising is concerned, there is still value in free-to-air as long as they've got the content and they've got the AFL, they've got the Olympics. And that's their long-term contracts. They just negotiated the AFL. So I think if you're looking for value, and again, it's sort of treated as a run-off book. Assume that free-to-air TV is going to be dead in 10 years. You still that stock will pay for itself in about 6 or 7. Everything else being equal.